And joining us from New York, in fact, Barclays trading floor, we have Doug Anmuth, who's one of the top analysts for Google. He still has an overweight rating on the stock. Doug, good to have you here. Let's bring in the second quarter numbers here. We have investors selling off Google shares in after hours. But how did you read the quarter? Were you disappointed?
So the way that I read the quarter was really, I thought this was a pretty good quarter on the top line in terms of revenue, and we clearly saw some good re-acceleration actually when you exclude FX and hedging and taking out some of that noise, really going from 22 to north of 24% in terms of revenue growth. So that part of it was pretty good. The concern here, and really I think why you are seeing the stock trade off, is really on the cost side, and as the environment has improved substantially over the last year, the costs have clearly come back at a bit of a faster pace than investors would like to see.
Yeah, we're seeing the price of the dollar being impacted here in terms of bottom line for Google, and also the spending on R&D and the concerns about China. You tell me what your concerns are going forward with Google right now.
Well, I think the biggest concern around Google really has to be just core search growth. And clearly Google is in a lot of different areas, and there's a lot of sort of noise around China and mobile and a lot of other things, and some of those are certainly big opportunities. But I think at the end of the day, core search is really the driver here, and it is the bulk of this business, it's certainly slowing just as we see it get more mature, and the real question becomes, can they really generate a new revenue stream? And that's why we're seeing a lot of investment in mobile, a lot of investment in display as well, and also applications. So certainly some of those things I think can be good opportunities over time, but right now they're really not yet big pieces of the business.
Yeah, what about the target price? Because you're still bullish on Google here, Doug. I'm looking at your target price of $650 for Google stock. We're trading at close to 500, 494 or so. So 650, I guess that's intonating a 31% upside from here. You really think Google's going to get some impact?
Well, I think Google is clearly, certainly one of the premier companies in the internet space, and I don't think, despite what we're seeing in terms of a overall slowdown to some degree in the search space, it's certainly not impacting their overall market position. So I still think this is an incredibly innovative company, and I'm optimistic about what they can do over time in mobile and the display space. And this is also a company which is generating really some very significant free cash flow on a quarterly basis. So the numbers here are still pretty good, but obviously falling just a little bit short in terms of what the street would like to see this afternoon.
Yeah, they do generate a lot of free cash flow. Doug, would you like to see that given back to investors via dividends, increasing dividends?
It's a great question, and I really think there is a lot of increasing noise and calls from investors around that to see some of the cash given back. And I think right now Google is up around $30 billion in cash, and they did announce a program today to potentially take out a little bit of debt. I would like to actually see some of that cash given back to shareholders at this point in time, yes.
Okay, Doug, one more question for you. You like Google, but that's number 3 on your list. In fact, you prefer Yahoo and also Amazon more than Google. I mean, two of these stocks more unloved, some would say, than Google has been in the recent past. Why Yahoo? Right now, we're looking at this search engine possibly faltering here in terms of market share.
Yeah, so really, Yahoo is my top pick in the internet space, and from a pure risk-reward perspective, I feel like Yahoo really gives you more upside. I think display growth is very strong right now, and in my opinion, the strongest part of any kind of growth across the internet sector. You have a new management team in there who I think is much more focused on rebuilding the infrastructure, ultimately investing more right now. But what I do think we will see is some ultimate margin expansion over the next several quarters. And I think there's a lot more that Yahoo can do and a lot more they can earn out of the current set of assets that they have. So I do think there is some good upside to Yahoo.
Okay, Douglas, nice talking to you. Thanks for your time. Douglas Anmuth of Barclays.